Hey folks, welcome back to Honey Money SG. So it's another episode of the personal growth development, and I think we are currently at stage 5. So stage 5 is really all about how to actually start investing as a beginner in Singapore. You know, we do have a lot of options to invest in Singapore, but in this video, I primarily want to focus on stocks investing. In other words, investing in equities, meaning that you have shareholdings within the company, or if you want to invest in an exchange traded fund, then what should you do? Because you have settled your housing, you have settled your retirement planning, you have settled your side hustles and your first job and all that stuff. So I think it's time to start looking at investing. And maybe for a beginner, I think you have to have the mindset of whether you want to go for individual stock picking or you prefer to buy an index fund. And before you even have the luxury to choose between buying an index fund or buying an individual stock, you first need to have a stock broker, right? So for stock brokers, there are currently two categories. One is called Custodian Stock Brokers and the other is called the CDP linked stock brokers. The difference between these two is that for Custodian Stock Brokers, your shares are actually held by the custodian financial institution, whereas for CDP linked brokers, your shares are actually held in the central depository. But the thing is, for CDP linked stock brokers, you can only buy those shares that are listed in Singapore. So for those foreign listed companies or businesses, I don't think you can put them in the CDP. Now to me, it's not really a big of a deal because in the past, when all brokers are actually CDP linked, you have to pay a minimum of $25 worth of commission fees. But now with more and more custodian brokers, I think they have brought down the price of trading the shares, be it buy or sell order, to like less than $1 for some brokers even. So if you want cheaper fees, then it's better to go for custodian brokers. And I've talked about some of them, right? I have like Mumu, Tiger, and also USmart. These are the three stockbrokers that are currently giving really good sign-up rewards if you deposit some cash with them and then complete a few terms and conditions. And like I mentioned, just go and complete their tasks for the free gifts first, then you can go and decide which is a better broker for you to invest in. Quick pause, if you haven't heard of Webull yet, it's the latest security brokerage in town and it's offering really low commission fees. In fact, zero commission fees, zero platform fees that you can use to trade your US and Hong Kong stocks. Webull offers a very attractive feature, and that is trading fractional shares, which means your dollar cost average becomes more effective because this time you don't have to like fork out really large amount to buy your favorite stocks. So if you are interested in trading options, I think Webull is one of the best platforms because they offer zero commission fees for trading options as well. Also, Webull has heard your feedback since my previous video talking about the FX spread. So they now offer a very competitive rate of 0.3% FX spread, which is level to the market. And finally, if you really want a good reason for you to use Webull, it's because if you use my referral link down below to sign up and deposit at least $2,000 in your Webull account and making 6 buy-in trades, then you can stand to get up to $100 worth of Apple shares from now till 30th June. With that, let's get back to the video. But if all these smaller brokers are not to your liking, maybe you feel that they are not reputable enough, then you can maybe go for Interactive Brokers, which is a very long traditional broker, but they offer really low rates for trading, as well as they have one of the best foreign exchange rates in town. Not only that, they also have one of the lowest margin rates. I think it's hovering around 2%, 2+% in this kind of rising interest rate environment, which is actually quite a cheap interest rate. But how cheap are we really talking about, right? For example, Interactive Brokers, they are offering around 35 cents per US trade. And then for trading US stocks for Mumu, I think it's zero commission for now and zero platform fees for the year of 2022. But if you want to buy like Singapore stocks, then maybe you can go with USmart because they are offering no minimum commissions and I think it's like 0.05% for trading value, and that should be the cheapest in town for now. The next aspect is talking about CDP linked brokers because these brokers will hold the shares in the central depository, which is actually a separate institution apart from the financial institution, and some deem it safer compared to custodian brokers. But the fact is, if you want to trade with a CDP linked broker, it's actually more expensive, but some of the cheaper options are like DBS Vickers cash upfront, where the minimum is like $10 plus, but that's just for the buy order. If you sell it, it's still $25. So you can actually get like FSMOne, whereby if you link to your CDP, your FSMOne can actually allow you to sell your CDP shares at a flat fee of $8.80. So I think that's quite a good deal, right? And that is still significantly higher than what you get at custodian, right? Because custodian is like less than $1 per trade, so 2 ways will be $2. So once you have set up all your stockbrokers account, then the next step is what do you want to buy. For beginners, if you don't really know how to start, right, I suggest that you guys go for the ETFs or index funds. If you prefer US exposure, you can go into the S&P 500 ETF, such as VOO or CSPX. These are the funds that tracks the S&P 500. And then if you want like a Singapore exposure, maybe you want to have an STI ETF that is ES3. Or if you want a REIT ETF, then I think there are a few. One of them is CFA in Singapore. But if you already know what kind of individual stocks that you want, then maybe index funds is not for you. I think you have to do sufficient research on the company, on the business, on the leaders even, to see whether the company is in the same direction as what you expect them to be in order to build your conviction to invest, right? I think that is really important, because when stock price fluctuates up and down, you tend to have emotions, be it positive or negative, and that may affect your judgment when you are trying to buy or sell a stock. Now, if all these stocks, investing and trading things sound too difficult and complicated for you, then maybe you want to look at the next option, which is RoboAdvisors or robo-investing. For RoboAdvisors, it's more like they will ask you a questionnaire of your risk assessment, your risk tolerance, and also how much returns do you expect to have. Definitely with higher potential returns comes with higher risk, and of course, if you prefer a lower risk product, then you can expect the returns to be lower as well. So some of the examples of robo-advisors would be like Syfe, whereas in a Syfe Wealth portfolio, you have things like Equity 100, your REIT Plus, or even if you want a customized portfolio, you can go for the Select Custom, which I detail in my monthly Syfe update videos that you can take a look. And then the other competitor is Endowus, right? For Endowus, I primarily use it for my CPF investing, but you can also use cash as well, right? So you can invest in the Endowus core portfolios, the unit trusts and funds to invest in based on your risk tolerance and your expected return. But because the robo-advisors are actually acting in your favor, they have to charge a management fees of around 0.4% to 0.6% per annum. And that will actually increase as your portfolio size grow larger. And you know, right, your market returns are not confirmed and definite. Only the fees are confirmed, you see. So either you lose money or make money, you still have to pay the fees to robo-advisors. So that's just something that you have to note if you're going through robo-advisors. But I felt that anything below 0.6% is worth a shot, right? Because you don't really have any kind of knowledge and you just want to outsource this kind of investing activity to an expert or professional. I think 0.6% is fine. Anything higher, maybe it gets a little bit too expensive and you're better off buying an index fund instead. Okay, so if you don't trust the stockbrokers and you don't even trust the robo-advisors, I think the next option you can at least trust is the banks, right? Because your in-house banks like DBS and OCBC actually offer investment products like the regular savings plan. For OCBC, you do have the blue chip investment plan, and for DBS, you have the InvestSaver. Both of each offer quite attractive low-cost options if you want to invest in a safe environment like a bank. You see, your monthly contribution can start from $100 per month, and they do have a sales charge of around 0.8% per trade. So this is really for those people who have really a low amount to invest each month, and maybe they don't like the idea of management fees. Maybe the 0.8% fees per trade is a more palatable option for them. But for me, I don't use them because I do have my own index funds for investing. So I don't need OCBC or DBS to go and decide for me. It's just an additional layer of fees. But you know, in my previous video, I talked about retirement funds and retirement planning, right? And one of the aspects of retirement planning is actually the use of supplementary retirement scheme, which is SRS. It's more like a tax relief strategy, but at the same time, you can actually use your SRS funds to invest. So to me, the SRS is actually a really good strategy because the income tax saved is definite, it's 100% confirmed. Imagine if you are in the 7% tax bracket, meaning that if you deposit $1,000 into your SRS, you're saving like $70 of the SRS contribution. But of course, your SRS cannot be touched until you are 62 at least. Then at the same time, you can use your $1,000 deposited in SRS to go and invest. Now, what you want to invest in your SRS is up to you, but I think for SRS, there's a limited number of products that you can buy. And for myself, I actually use my SRS to go and invest in S27, which is the ETF listed in Singapore that tracks the S&P 500. Of course, you can also use your SRS to go and buy Singapore listed stocks like like your banks, your REITs, all these really popular counters in the STI ETF. And the reason I buy an S&P 500 ETF in SRS is because it's widely diversified across 500 strongest and biggest companies in the US. So that kind of gives me a lower risk diversification factor. And my choice of brokers to invest this is actually using the Poem's Cash Plus, which I detail out in my previous video over here on the cheapest broker to invest S&P 500. So you can take a look at that video if you really want to use Poem's Cash Plus to invest in your SRS. With that, thank you for watching. My name is Christopher. This is Honey Money SG, steering young adults to financial independence.